Hello and welcome to today's video. In today's video we're going to look at VAT and in particular VAT for resellers.
Told him I can be a fighter if you want. I'll be there to catch you if you fall. I can make it brighter when it starts. I told him I would do it all for you, and I know you do it for me too.
Okay. So I thought with this video we'll have a little bit of a different setup and different way around and actually have a bit of a conversation about this topic. My name is Aaron Patrick, I'm a chartered accountant, certified UK QuickBooks trainer and also a reseller. So I thought it would be best bet to be able to talk to you guys about exactly what the issue is regarding VAT. Now the reason I thought about this video in the first place was I keep seeing the same reoccurring message. And that same reoccurring message is that resellers are a bit worried or apprehensive about reaching the VAT threshold. Now I completely understand this and I completely understand what the reasons could be and I understand why people are a little bit apprehensive about it. But my job today is to make sure you understand exactly what the implications of being VAT registered are, because I'm not saying it's right or wrong to be VAT registered, but I'm saying that you should really consider what VAT really means before you make a decision in terms of what's my turnover going to be so that I don't become VAT registered. Before we go into it as terms of a reseller, let's think about what VAT itself is actually all about. VAT is that one tax that actually you probably come across more than you expect and you probably don't realise it. VAT in essence is about making sure that the end consumer, so take off your hat as being a reseller at the moment and just consider yourself as a typical consumer. So when it goes to a supermarket, buys from Netflix, goes to a football game, whatever it's going to be, you're actually someone who is then paying for or paying VAT at that point. VAT itself is all designed to be a tax generated by the government to make sure that people who buy something as an end consumer level, so when you're the person who buys that item from the supermarket, or you're the one who buys Netflix, or you're the one who buys that ticket for a football game, then at that point you're incurring VAT, and it's the responsibility of that particular business, whoever it is you bought that item of, to collect that VAT and pass it over to HMRC. So that's VAT in a nutshell. It's only supposed to, and under most circumstances, in typical business circumstances, it's only supposed to affect the end consumer. And as a business, and as a VAT registered business, your role is to charge something at its normal price, but then add on VAT on top, and you collect that VAT on behalf of HMRC. So if you weren't a reseller and you were just a standard business, you would go to a person, you would probably charge him £100 plus VAT, so that's £120. And at that point, what you're doing is you're keeping £100 for yourself, but you're collecting £20 of that in a pot ready to pay over to HMRC at a later date. And the idea of VAT shouldn't be an issue for businesses. Now in the reselling world, we have a completely different world, and I'll explain that and I'll go through that in more detail. But in a general business sense, in reality, or the way it's designed from a VAT point of view, is that it shouldn't be something that negatively affects a business. A business should just be conduit, a form, a mechanism so that HMRC can collect VAT off the likes of you and me when we go and buy something at a supermarket, or we rent something, or we buy a car, or whatever the thing's going to be. So in a nutshell, VAT isn't something that we should be worried about. VAT is just something we need to understand, and then we can decide, is it something that we want to make sure as a business we're not VAT registered because it will have negative effect, or is it something we just embrace as a business and then we can see if there's any benefits and everything to go through it. And that's exactly what this video is all about. Now let's look at the facts about VAT. The first thing about VAT is, as a business, you don't necessarily have to be VAT registered. There are elements as which, as a business, if you're below a threshold, you don't need to be VAT registered from day one. That threshold is really important because although you don't have to be VAT registered from day one, if you go past that threshold and you don't inform HMRC and you don't give them notice that you have gone past that threshold, you can be liable for some really serious fines and penalties. So the best thing to know is understand exactly how that and what that threshold relates to. First of all, that threshold is purely on turnover. When I mean turnover, I mean how much it is when I sell an item. So what I'm talking about here is irrespective of how much this item cost me, it's when this item gets sold, that's how much it relates. And it's always the gross figure. Doesn't matter if you've been charged from PayPal or you've had a delivery fee or it cost you and you've made a loss on that item. It's purely on the amount you've sold it for. Now that amount you've sold it for on an annual basis, every 365 days. So that's not just at the end of a tax year or just end of whatever year you choose, or end of a month or end of a calendar year. It's on a rolling 365 days. At the end of those 365 days, if your turnover is over £85,000 currently, and that's subject to change, so make sure you keep an eye on whatever the latest and most up-to-date figures are. But if your turnover is above that figure, then you must be VAT registered. Now, you can be VAT registered before that. It's called voluntary VAT registration. And if you've decided that after watching this video, or you've thought about it before, that being VAT registered is a benefit to you, then you have every right to become VAT registered before you reach that turnover. But again, I can't stress this enough. This is purely on turnover, and it's that top figure. If you've agreed to sell someone something for £120, then it's £120 that counts towards that turnover, irrespective of any other conditions that are related to it. To break that £85,000 down into smaller chunks to make it understandable, if you work on around about a 5 days a week sort of mentality, then that turnover figure is £320 a day. Now that £320 a day, depending on your business and depending on what you sell, could be something you quite easily go over on a day-by-day basis. But remember, you have to be hitting more than £320 5 days a week for a whole year before you hit that VAT threshold. Now, to put that £350 into more perspective, let's have a think about it from a stock point of view. So from a stock point of view, £350 doesn't always go that far. I mean, yes, from a media point of view, it's going to take a lot of media to get to that point, but sometimes you can come across items that can sell really well. So for example, these headphones here, I could get easily £250 for it. So if I've made £250 on this one alone, the chance of making it past that in one particular day. Also, real big ticket items like this here, I've got a MacBook Pro that could get sold. Now, if this gets sold, that's £1,500. So what do I do for the rest of the week? Do I stop selling or do I stop putting through in? I need to know, or I need to understand exactly how that works. And that's exactly what I mean by not limiting yourself, not taking yourself, not pushing yourself away from it, and giving you an opportunity as a business to try and think about maybe being able to put some more into your business. Another item, this GPS item here, this GPS item that's fully bagged and ready to go, I've looked at it and it could get me £500. Again, if I sell this in a particular day, is that it? Do I not sell for another couple of days? That's what I mean by you've got to think about it in a long-term perspective, and just limit yourself because you may have to go over the VAT threshold could be detrimental to your business. Now again, I'm not saying 100% that be VAT registered or not be VAT registered, but you need to make the decision based on what your business needs to be and what your business needs to achieve. So for all I want you to take from this is to consider, ask yourself one question. Is the VAT threshold a deterrent or an opportunity for you? And if you can figure that answer out and you can understand that answer, then you're going to be able to make the right decision for your business, be it being VAT registered or not VAT registered. Now, VAT isn't all about the doom and gloom, and we're going to show you in a minute how and what is going to affect you in terms of profitability and everything else when it comes to VAT. But first of all, let's consider and let's think about some pros about VAT registration. So VAT doesn't just affect what you sell. So in reality, again, if we took this into a simpler business structure and we just looked at your typical business, when they sell something, they'll add VAT on top and they'll pass that over to the consumer. But if they've bought that item from another business and they've incurred VAT at that point, they're able to claim that VAT back. And they're also able to claim back VAT on loads of other items as well. Telephone bills, possibility of rent. There's loads of items in there that they've incurred VAT on. And because they're VAT registered, they actually get to claim that back from the government. So in some circumstances, say a butcher, for example, when they charge VAT, because their VAT is set at currently 0%, they charge VAT and it actually doesn't cost them anything. But each and every time they incur a VAT expense, they're able to claim that back. So in a butcher's scenario, we would go around and we would VAT register them from day one, because each and every month, quarter, whatever they want to fill out their VAT returns, they actually get to claim VAT back off the government, because they're actually incurring more VAT charges than they are actually paying for VAT in the first place. So it's not always just doom and gloom. If you're into a lot of retail arbitrage, if you walk to a supermarket or B&M or whoever it's going to be and you've bought some items off the shelf, they're going to charge you VAT. If you're VAT registered, you have the ability to claim that VAT back. Another pro is if you go to the auctions a lot, you'll notice they charge VAT on everything they sell. Well, then you get to claim that VAT back again, and you get to then make sure that your VAT has been accounted for that way. So yeah, there's quite a lot of positives to VAT registration. It's not just purely negative, but obviously there are negatives that goes with it. First of all, it will be a hit to profitability. I'm going to show numbers and show exactly how that means, but you will find that on a single item, you will noticeably see a reduction in the profit that you earn. But also, there is a lot more administration relating to VAT as well. So it is something you might want to consider in terms of VAT and how that works. And you might want to think about properly, 100% understanding if it's going to be right for you. And finally, there's a lot of red tape that comes with it as well. So you have to make sure from a compliance point of view, you're complying with the rules and regulations. In a nutshell, if you're VAT registered, you have to fill out what's called a VAT return each and every month or quarter, depending on how frequent you want to do your VAT returns. And then you have to make sure not only do you submit that, but you pay over or they pay you back whatever VAT is due or is due to be refunded. So you've got an extra complication there. Also, from an administration point of view, you do really need to be looking at something like QuickBooks to be able to make sure that you're complying with what's called Making Tax Digital, which is basically HMRC's way of making sure that all taxable elements are recorded digitally. Making Tax Digital MTD. But it's not all doom and gloom for resellers. Resellers actually do have their own way, or their own VAT scheme if you like, in terms of making life easier for you. And we're going to dive into that as well. So first of all, let's get ourselves over to a nice spreadsheet. Now the first thing I want to do is talk about in these really simple terms. Let's talk about I'm selling this particular item here. Now, this item is a cube, but what's special about this item is it's been signed by Nick Hills and Andrea Hills. Therefore, it's going to be worth more than what I would have paid for it. Now, I've made these figures up, but imagine I paid £30 for this originally, and I know that I can sell it for 120, or let's say I've already agreed a sale for £120. Now, if I've sold this for £120, then what I want to be doing is figuring out what my profit's been made. So in this really straightforward example of a non-VAT registered business, so typical reseller when they first start, I'm going to ignore fees, I'm going to ignore delivery, I'm going to ignore all those sort of variable costs, and all I'm going to be considered about and we're going to be looking at this point in time is I'm going to consider, or I'm going to make sure that I've put into place how much I paid for it, how much I've sold it for, and the profit I made. Really straightforward on this one. Without VAT, £90 is my profit. Remember that £90 is going to go into my taxable turnover, taxable profit, and that's going to be what I would pay taxes on outside of VAT. Okay, let's make this a little bit more complicated then. So example 2, what about if I'd have bought this from retail arbitrage? Or what about if Nick himself was VAT registered when I bought it from him? Now, if that's the case, then I would actually have a different figure here and I'd find a different profit made. And this is because at this point, when I bought the item, I incurred £5 of VAT because the person who sold it to me had £5 of VAT. Therefore, I now have the opportunity to claim that VAT back, meaning that in truth, this item, instead of costing me £30, now costs me £25. Okay, but what about when I sell it? Now, ideally in this world, I'd want to sell it with VAT on top. I want to know in the back of my mind that I'm going to incur VAT on it. And when I sell this item, I want to sell it for what it's worth, plus VAT on top. We all know that in the reseller world, that's going to be really tricky because if we try and sell it for £120 plus VAT, that's going to be quite expensive. That's going to be £144 that we will be looking to sell this item for. And if I was lucky to get 120, it's going to be I'm going to really struggle to get £144 for it. So imagine in this scenario that I sold it for again at £120. Now, I've sold it for 120, which means that £100 of that is for me to keep and £20 is for me to hand over to the VAT map. Therefore, in this case, I have lost out on this deal because instead of collecting £90 that I've now collected 75. But it's better than what people would probably have assumed, is that you would have had to have paid over £20. Because in fact, instead of having to pay over £20 of VAT to HMRC, in effect, I'm only paying £15 over because I incurred £5 at the beginning. So it's not as bad as people first thought. Okay, let's look at the next scenario. Now, what if I bought this item and that person wasn't VAT registered? Well, at that point, I do lose out again. The reason I lose out this time round is because unless they're VAT registered in the first place, I can't claim back any VAT that this might incur because they haven't charged me VAT in the first place. If they've charged me £30, then that's all they've charged me. They haven't charged me £30 with VAT included. Whereas in example 2, I paid over £30, but actually they had paid £25 and added £5 VAT on. And in their book, they're going to incur and show £5 worth of VAT they've collected to pay over to the VAT man. So if they're not VAT registered, so you buy off, and this happens all the time, you go to Facebook Marketplace, you buy off a reseller who isn't VAT registered, you look into going into the car boots or anything like that, they're not necessarily, and very unlikely, especially at a car boot sale, going to be VAT registered. Therefore, when you buy the items off them, there's no VAT to reclaim. In that situation, this is where I normally, as a reseller, we would be at a disadvantage. Because when we come to claim VAT back off that £30, there's nothing to claim, so that's zero. When we go to charge the VAT, we still have to pay over that £20. So in that case, we're still going to only sell £100. Therefore, we've lost out even more to what we had originally, and now we're down to only £70 of profit. Huge editor error in here. So just to clarify 100% on what I meant by that, when I talk about doing the second-hand margin scheme, you actually have a choice to have a mixture of the two. So if you do a bit of retail arbitrage and you also sell to the public, then you have got the opportunity to use a mixture of the two. It's not one or the other. Also, 100% clarify, when we're looking at scenario 1 is when we're not VAT registered, 2, 3 and 4, those examples is when we are VAT registered. Just to clarify and make sure it's 100%. Enjoy the rest of the video. But actually this is where HMRC is on your side. That's where they've developed a special scheme just for the likes of us as resellers to be able to help us and get the most out of this and make sure we don't feel left out and we're not losing out on the VAT aspects of it. It's called the second-hand margin scheme. The most easiest way to think about it is for cars. If you think about a car and the way it's sold and bought in terms of a garage, well, that garage is normally buying it off the likes of us as part exchange. Well, we're not VAT registered individually, so we wouldn't have any VAT. So they're in the same boat that we are. They're buying items off people who aren't necessarily VAT registered. And that's the same for us. So let's think about this here. Example 3 is when we don't have the second-hand margin. Example 4 is when we do have the second-hand margin scheme. And what's different about this is the way VAT is calculated. Instead of VAT just being straight on the amount that you've sold, so in our case £120 for this cube, what the second-hand margin scheme says is, well, what profit did you make on the item? And in our case, we made £90 profit because 120 less £30 gives me a profit of £90, and it's that £90 that I get to put VAT against it. So instead of having to pay VAT against £120 worth of sales, I'm only having to declare my VAT against the £90 of profit that I made. Second-hand margin scheme designed particularly for us resellers and how it benefits us. So overall, yes, we are losing out. There's no denying that. When you're VAT registered, you are, as a reseller, very limited in what you can sell your item for. So it's going to be difficult for us to be able to sell our item and then add the VAT on top and sell it at that point. Now, if you're doing job lots or you're looking to sell to businesses, for example, they won't care. When you're a VAT registered business and you sell to another business, you can add VAT on happily. And the reason that they're so happy about that is because they just claim that VAT back like you get to claim your VAT back from your expenses. So if you're in a position where you're selling business to business, you're going to be okay. So if you can get rid of stock that way, VAT is not going to be a problem for you. Majority of us though are going to be selling to the public, and we've got to be careful about our sales figure because we don't want to be having that to be the thing that hits us. Okay, the next thing I want to think about though is you've made a decision. You don't want to be VAT registered, and I completely understand why. We've just shown why from a transaction by transaction, you aren't going to be making as much per sale. And that is a big consideration. But don't let that be your only deciding factor. The other deciding factors is the administration costs and getting all that administration in line so you can file a VAT return in the first place. Having to make sure you're compliant for VAT, so you're going to have to show your VAT number in things like eBay and PayPal transactions. But don't let that be your only factor. And the reason for that is your long-term aspect to your business. We're all in this to be able to make ourselves and generate ourselves profits. And when we think about our business, the most important number out of all of them isn't turnover, it's profit. Because profit is what we have at the end of the day to go and pay our mortgage or our rent or make sure our kids can go to school or whatever the cost is. That's all going to be generated by profit. Sales is nice to have, but it's not as important as profit. And profit's our most important metric when we look at how good our business is doing. So let's think about that profit figure, and let's think about how just thinking about the VAT may or may not be the best appropriate course of action. Okay, so what I've got on this screen, ignore the right hand side for now, let's just concentrate on this left hand side just to figure out where I got my figures from. So turnover to reach VAT is currently set 85,000. If you work 5 days a week, you're allowed to have £327 per day, or if you round that up, £330. Now what I've done is I've looked at a really simple profit and loss account. Now I've not based this on anything, so there are just figures effectively made up in this case, but it's so you can understand. But in every business, there's what's called variables. So in this case, I've got my daily turnover. I've set it at £320 at the moment, so I'm below that VAT threshold. I've got my profit of 50%. So what I'm saying there is if I buy something in this example, I'm going to sell this for double its price. Okay. So if I bought that for 40, I'd sell it for 80 and I'll get a 50% profit margin on that one. Then there's fees involved, eBay, Etsy, whatever it is that you are, Amazon, whatever it's going to be, there's going to be fees. Now I know I've lowballed this, but I put 10% in there. And then you've got cost of getting the item to there. Again, just put a percentage in there of 2%. And I'll explain why I put these percentages in for now. Rent, you may be, because if you're up to £85,000 and you're almost at that level, then really you're going to need somewhere to put this stock. So I've assumed there's a small amount of rent in there, £400 a month. Again, you could be paying less, more than that, whatever it's going to be. Now, if I take this into consideration, this is why it's so important. On the right-hand side, I've put together what I would call just a really simple profit and loss. And our most important figure is this figure at the bottom, profit. Okay, so let's put these variables into something that we may be able to understand and hopefully be able to explain why VAT registration isn't something that necessarily should be holding you back. Look at this figure here. So profit there. Now the profit figure, as I've said, is the most important figure for us. We want to make sure we get this profit figure absolutely spot on. That's what we're going to be spending, paying for our rent for and everything else. We want to be making sure we can keep that profit as high as we possibly can. Now to affect our profit in this scenario, we've got these variables. So at the moment, I'm saying we're turning over £320 per day and we're aiming for 50% on our assets. So if we buy something in for a £5, we want to sell it for a £10. Keep it nice and straightforward. Fees in place, got delivery in place. We may even have some rent coming through. Telephone costs, and I always advise you to put your telephone costs for your business. Maybe got some travel costs to associate. So here I've just said we do 100 miles a week. Maybe that's applicable to you, going to and from your rented accommodation. You might have some computer expenses, you might have packaging costs. All these items are going to affect basically your profit at the end. Now, if you limit yourself to only 85k, that makes it really difficult for you to increase that. Maybe you're happy with that figure, but maybe you're looking into trying to expand your business, trying to grow your business, trying to get more profit into your back pocket. So then maybe you can get rid of your full-time or your part-time job and go into reselling fully. Whatever your aspirations are, you may be looking to increase this profit figure. And at the end of the day, That's what we're in business to do. We want to try and get as high a profit figure as we can, as fair as we can. So in this scenario, what I'm saying is, well, what happens if we change our variables? And if we limit ourselves to only turnover, we're going to get ourselves a little bit of trouble. So as an example, what I'm going to do is I've got two figures here, or two columns here. One, and this is all without VAT at this moment in time, one is before the variables changed and one is after variables changed. So for example, if I was to go and say, actually, I figured out how to reduce my fees down to 5%, then my profit figure goes up, because what I've done is I've reduced the amount of fees and putting it there. So I've reduced the amount of costs that I've incurred on each and every sale. Maybe my delivery fees, I've found a way to make them down as well. So let's put them down by 5%. I'm down to 4%. Again, I'm increasing my profit here and I'm making more money. But you are limiting yourself in this case, because the one big factor that can increase this more than anything is this turnover figure up here. And it doesn't matter what my turnover aspirations are, I've maxed myself out at 85k. So really, I'm having to do a lot of hard work down here to be able to affect this profit figure. Now, if I took that out of consideration, so let's figure out what VAT would have on it. So first of all, let's look at the exact same figures, but in a before and after VAT scenario. So forget the change of all the variables. Let's go back to those original figures where we were earning just under 20k. You'll see that the VAT aspect does have quite a significant impact. And our turnover is affected by VAT. And I am using here the second-hand goods scheme. But what I'm showing here is that when you, even though you've sold 83,200, you've had to show that to the VAT man. Therefore, you've only got yourself 76. But what's happened here is, everything else we may have benefits for. All the fees, we get to claim back the VAT. So instead of costing us 8,320, they're actually now costing us 6,920. Instead of having delivery fees of 4,160, possibly you've got VAT on there, 3,600. Depends where you're buying the delivery from. Maybe your VAT, you had VAT on your rent. Now, it's not always the case, but there is certain situations where you'd have VAT on the rent, VAT on your telephone, VAT on your travel costs, VAT on your expense, VAT on your packaging. So there's potential for you to claim back this amount of VAT as well. Therefore, the actual impact to your profit isn't £6,900. It's much less because of the VAT we're able to claim back on all the expenses we've incurred. So at this point, we're £3,000 off from what we were before. Now, if we do the same experiment, so if we look at the same variables, but this time we're considering it from the fact that we're now VAT registered. So now we care about these two figures. And the thing is now, we've got much more control in variables in terms of trying to make our business more profitable. Yes, we can look at maybe reducing our fees again. So maybe now we can reduce our fees to a different platform and they're only 8%. Yes, we can look at maybe reducing our delivery again. So we can look at maybe saving ourselves a percentage on that as well. So we're starting to increase our profitability. But the most easiest one to do is to sell more items. So if we've got to £320, then what's to stop us going to £350? Now, with an increase of only £30 a day, we're now higher than we were before. So if you remember before, we were just under the 20,000, we're on 19,780. Well, now we're on 21,000 just by increasing our daily take-ins. And this figure is now limitless. We might be able to get to £550 per day. Well, if we were up to £550 per day, we've doubled our profit for that business. So that's why it's so important. We need to just think about it from more than just our pure, do we want to get to that VAT threshold? Is that good? If that's our ceiling, then it's going to be really difficult for us to amend our figures below. Now, yes, the most easiest way of amending this is your profitability figure. So if I go back to that VAT only and no VAT information, so if I go back to the fact that we've got no VAT in it whatsoever, this figure is the most important one. If we can reduce this figure, then yes, we'll increase profit massively. But that's our hardest figure to increase. That's the one we have probably the least amount of control on. COVID-19 and everything else, they're really variable, and that's going to be really difficult for us to be able to maintain that, and every item's going to be different. So we're always going to have some form or some way of being able to figure out what our profitability is going to be on selling an item. But if you can get 50%, then it's going to make it easier for you to understand and be able to figure that out. Now, one of the things I did say about this was about the administration burden, and that's where QuickBooks can help you. It'd be wrong of me not to bring QuickBooks into the equation as well. So let's look at QuickBooks as well. So if I head over to QuickBooks, you'll see that QuickBooks has loads of good features in here, but one of the ones that's important for today, down the left-hand side, taxes, and in there gives all the necessary bits we need to be able to file your VAT return as an MTD compliant VAT return directly in the software. So here we're talking about submitting it. Now remember, another good thing about it is compliance and making sure you don't miss. If you are over that £85,000 over 365 days and you haven't told HMRC, there could be potentially a lot of trouble coming your way. So how do you keep an eye on that? Well, QuickBooks makes it easy for me. On my dashboard, I can set it so that on my sales, I'm looking at the past 365 days, and I can then see if I'm over that figure or not over that figure. And if I need to look in that report in a little bit more detail, I jump into reports. I get my favorite report of all time, profit and loss by month. And on the drop down column at the top, I have the option for last 365 days or since 365 days, press run report, and here I can find where it was that I was actually jumping over, and I can find out at what point did I go over that 365 day split. One last thing, if you've come all this way, then obviously you care about profitability. So one other tip for you, if you are concerned about VAT and how that's going to affect you and the amount of tax you're going to pay, another way of looking at it is how is it your business or how your business is already set up could have an even bigger effect on it. Just as a quick one, look at this profit here, 16,580. If I looked at my income and tax return and estimated between a sole trader and a limited company at 6,580 on that first year alone, you could be looking at £1,200 more of income tax. Now, part of that is to do with this payment and account scenario, and there's a whole separate video and topic for that. But that's the sort of savings you could make by going from a sole trader to a limited company. And as those figures arrive and go up, so if you did want to smash that turnover barrier, you want to become VAT registered, I would really consider going to a limited company status as well. So if you did get up smashing that turnover figure and you did £550 a day, remember if you're not VAT registered, the most you can earn is 20 grand on that point in this scenario. But in this case, I've got 131, giving me £34,000 there. If I was to jump into my estimated income, I could save myself £4,650 in that first year just by being a limited company as opposed to a sole trader. Now, if that's something you're interested in, smash the like button, put some comments down below, and I can always do a video explaining that in a little bit more detail, or reach out to me using either the YouTube or at Bofix themselves, www.bofix.com. Well, I hope you found that interesting. I think the most important thing here is to make sure you fully understand VAT. Don't see it as something that is going to get in your way. See it as something that if you are going to consider being a VAT registered, then you've got to get yourself all ready. Think about it as something that may actually help you grow your business, help you earn more, help you get more profitable. Obviously there's going to be pains involved in that, and obviously it's going to be difficult, but that's where people like myself can help. I've got these videos coming out for you. The actual special scheme I mentioned about, there's already a video I've done on that one, so I'll make sure I link that one for you. And if you were at a point where actually you want to get VAT and all that lot dealt with for you, then consider guys over at Boff. We even do a special offer just for you guys as resellers, so we make sure you get a nice discount because you're resellers and going through there. Also, from a fee point of view, it's really straightforward. It's all based on how many items you sell, so it's really easy to understand what the fees are going to be. But do also think about getting QuickBooks. I personally think that's going to help you. It's going to give you a benefit going forward, so do think about that. Again, I've got loads of videos on where that benefits come from your way. Not just the fact that you can always see what your turnover is and you can understand where it's going to be. It's a rolling 365 days. So as we go forward with extra day, you've got to take into account the days that have just gone beforehand. So do put that into consideration, and do think about not limiting your business at that 85,000 ceiling, and maybe you want to start thinking about smashing that and going even further. My name's Aaron, hopefully you found this useful. Remember, like, subscribe, maybe even press that bell if you need to, and we can make sure that you get all the knowledge you need from myself. Final thing to say is thank you very much, thanks for watching, and I will see you in the next video. Bye for now.
I say yeah. I told him I can be a fighter if you want. I'll be there to catch you if you fall. I can make it brighter when it starts. I told him I would do it all for you, and I know you do it for me too. I can be a fighter if you want, if you want. I can be a fighter. I can be a fighter if you want. I can be a fighter if you want. All the way that I feel, yeah, I know that it's real, 'cause I can get 'em out of my head. I don't care what we do, everything's feeling new. Even if we stay in bed, my heart is saying yeah.